It's all thing tariffs again today, but this time markets are reacting well. Good morning everyone and welcome back to Morning Markets here at True Potential. This is week 3 since Liberation Day and it's a full-scale retreat on tariffs from President Trump. If we go back 2 weeks, then tariffs on all countries except China were postponed. If we go back just 1 week, we had conciliatory overtures from Vice President Vance towards a bilateral trade deal with the UK. He also made the comment that it's important that officials listen to business concerns, and that was a direct reference to the fact that the US administration is clearly being lobbied hard by domestic businesses across the US about the disruption to supply chains and to freight that the tariffs were going to cause. And then this week, we're only 2 days in here in the UK in a working week, but we've had a full-scale retreat with regard to tariffs on China. President Trump has revealed overnight that tariffs are unlikely to go to 145% and should head lower. He said they're unlikely to go back to zero, but they were never zero in the first place, of course, due to his tariffs from 2019. We also had some interesting comments with regards to the Federal Reserve and also with regards to Treasury Secretary Scott Bessent. First of all, President Trump has admitted that he will not fire Jay Powell from the Fed. That would cause huge market disruption. We're already seeing bond yields rise when typically we should expect bond yields to fall in an environment where growth expectations are going down. But this also reflected President Trump's recognition that he cannot fire the chair of the Fed because it's a Senate appointment. It's only a presidential nomination. And latterly, we've had comments leaked by Treasury Secretary Bessent that de-escalation with regards to China is necessary and necessary quickly. So none of this is likely to bring China towards a negotiating table. They likely are able to withstand or have a higher threshold for pain with tariffs than Trump does. So we're likely to see some more conciliatory overtures from the US administration towards all potential trade partners. In fact, again overnight, Vice President Vance has stressed the need for closer bilateral ties between the US and India. So memorandums of understanding are likely the way forward for trade agreements with the UK, Europe, India, Japan, Korea. These aren't really trade agreements. They're more a reflection of the trade agreement or the memorandum of understanding that President Trump signed with China back in 2019, where China simply agreed to buy some more soybeans from the US in an effort to reduce the trade deficit between both those countries. So that's likely the way forward. These memorandums of understanding don't have to go through relative parliaments. They really are subject to a signature. They don't require an approval process. They don't really mean much. But they will likely allow Trump to roll back over time, and hopefully there won't be the tariffs imposed in July when the 90-day window expires. So markets are reacting well. We're seeing bond yields fall, which is prices on bonds go up. We're also seeing equity prices rise, led by the US, as we have what's called a relief rally. So that's all for today, but please do join us tomorrow where we'll take more of a UK focus and we'll focus in on the latest borrowing data from the Treasury here. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.